Hi my friend and fellow trader, it's Will here over at Pips and Gains, and welcome back to another trading week, another trading month. And in this video we're going to go over the possible sell-off on the British pound, Japanese yen. We are presented with a beautiful opportunity on this asset, and in this video we're going to go over the reasons behind the setups that I've just posted on my TradingView channel, but you can head over and have a quick read at there also. Okay, so let's head over into the charts. I'm just going to delete all the drawings that I've done and then show you why I'm already in a sell position on this longer term, but why I think we will be entering into another sell position very soon, what I expect to happen. Okay, first off, monthly charts here, we can see clearly that we are now approaching a supply/sell zone. Okay, from this monthly move down here, you can see from this level here, we have the swing high and then the huge breakdown in price. This would be a key area for sellers to be drawn, buyers to be drawn to, and sellers to come into the market. But what I also want to show you here is on the monthly charts, we are now at a critical level from this leg down that started in 2007 to 2009, basically during the last financial crisis. And we have reached the 50% Fibonacci retracement level. And we're just going to mark this here. Let's mark that in red, which is around 184. What I'm expecting to happen, if we look at the lower time frames, if we look at the weekly, not so much the weekly now. Start looking at the daily charts, we are starting to get divergence signals. So what I expect to happen, want to see happen before entering a sell, is I suspect price will pop up above 184 and then sell off and break out, take out that last low from a few weeks ago and then head down this way. So a pop above here, selling off pretty quickly. Price will likely take out this low down towards 179, get a reaction, and then sell off down towards, could likely happen down towards this previous weekly high, now support. And if we look at the daily charts, an easier target is likely around 177, which was basically the start of these four huge candles here. It'll likely be the pause in that candle, in that move. So you have the rally and the pause in the two bullish candles. So the market will likely target the 177 area first. Any possible Japanese Bank of Japan intervention could make this happen a lot quicker. As I wrote in my post, we are getting divergence signals. We add the MACD. Onto the chart, we're starting to get daily divergence. If we look at the 12-hour charts, you can see every time we pop a new high, the price sells off pretty quickly. Okay, this is telling us momentum is slowing down. We're getting divergence signals on every time frame from the daily chart now. Okay, if you're not aware of what divergence is, it is when price is moving higher, but the indicator is moving lower. That's very divergence. It indicates that price action is slowing down. And expect maybe, like I said, one final push above these highs here, and then a sharp sell-off, daily close, then enter the market. Okay, I will be looking to use my TRFX indicator to enter the market on a sell signal. Okay, you can access this indicator absolutely free via the link in the description area or the link in my TradingView profile. Here, you can just click that link, download it, and you can access this indicator absolutely free to use with your trading. So that's the idea. Again, we are at a critical level, higher time frame, or entered a higher time frame supply/sell zone at a monthly Fibonacci retracement from that move in 2007 to 2009, which is key. So I do expect that we will get sellers coming into the market very, very soon. Okay, so that is the idea. If you like the idea, don't forget to like and share. Subscribe to the channel to stay up to date, and I shall see you on the next video. Thanks for watching.